Hello, everybody. Today I have a great presentation for you on how to follow your process instead of focusing on the P&L statement. Um, so let's just dive into it. Um, Start the presentation. So it's such a cliche to say, but we must focus on the process over the profit and loss statement. It is critical because it doesn't matter if you're a $5,000 account trader, if you're a $50 million account trader. If you are focusing on the dollars amount, your ego is going to get involved. You are going to have mistakes. You have to focus on just the process. And used to say like it's such a cliche that I kind of ignored it for the longest time. Um, I would always, after every single trade, I would look at my statement, and then I just kind of clicked that this is why I'm kind of at a break even point in my trading. I'm not focusing on this process. I'm caring too much about the money, and especially for a trader who isn't as confident. Um, Maybe they're newer, or maybe the market conditions have changed and they haven't been doing as well. It's just so important to focus on the process because if you don't, your ego will get involved. You'll have FOMO trades. You'll have revenge trades. You'll take gamble trades. You'll need to be stimulated. So, next slide. Strategies to focus. I kind of just talked about this, but you got to hide your profit and loss. You don't even want to look at it during the day. Just hide it. I hide my buy and sell buttons when I'm not in a trade now. I manage to trade with the take profit and stop loss orders. And I just want it out of sight, out of mind. I don't even want to be thinking about it. So, next slide. Good process strategies. How do we follow a good process? We have to be, and what does a good process look like? We have to be selective, okay? We have to have criteria that if they are not present, we don't take the trade. And we have to remain objective, okay? So we have to, whatever time frame we trade, I like to primarily focus on the 1 hour. So for me, primarily focusing on the 1 hour because there's less noise and it's a good time frame to focus on for day trading. But I also like to focus on the 5 minute, the 15 minute, the 4 hour, the daily, and the weekly, especially towards the end of the week, when it can really expand or contract. Levels don't really matter. I mean, you should look into random line theory. I heard Adam Grimes talk about this, but basically, if you just draw random lines all over a chart, the market will just randomly go touch them, and it's crazy, but it's real. The thing about levels though is drawing them. It still helps you maintain a frame of reference, especially around the really key critical areas. The reason that levels work is because people pay attention to them, and so the more people that pay attention, the better the level is. Um, Fair value gaps. I can't believe I'm including this in my presentation because I'm kind of an ICT hater. But what I realized is after trying to have an open mind and digging into that method, which is basically, I don't know too much about Wyckoff. I mean, I know like upthrust and spring and his market cycle of, you know, accumulation, markup, distribution, markdown, etc. But what I like about that method and why I think people are successful with it is it helps you think about the market in a certain way. It has you focus on objectivity, like it has you identify levels, look at the market behavior at that level, and whether it's a bounce off the fair value gap or it becomes an inverse fair value gap where it goes through the level. It just has you paying attention, and it has you paying attention to the overall trend. So I think there is some value in it. I mean, especially if it's taken from Wyckoff, who is, you know, one of the greatest of all time on the Mount Rushmore and pioneers of technical analysis. Um, Counting candles, Al Brooks method. I think markets are random. I don't think there is a huge value in paying attention to every single candle, but there's different ways to look at the market, and there's a lot of different ways to be profitable. Um, so this is just my opinion, right? If you disagree, I'm happy to find being disagreed with. Throw push back in the comments. That's my opinion. Um, Markets are either contracting or expanding, and we want to focus, or I want to focus for my method, on just identifying when is it contracting, when is it expanding, focusing on inside bars on the hourly. We want to get in at those pauses before the big move up on the right side of the pause, right? So if it makes an expansion move up and then it ranges, and it's just, you don't really want to get in right after it starts to range, because you don't really know what's happening. But especially coming out of the open, or on a flag pullback, or a nested cup, this is, when it contracts and it expands, and we want to get in prior to the expansions. In a pullback, get in at the mean reversion to rejoin the trend. So I kind of covered this already. It looks like I accidentally include some bullets again. But you have to focus on, you have to have things you look at, and it doesn't matter what they are. Like, you can find your own things to focus on, parameters, whatever works for you, right? And you have to determine that with your back testing, your forward testing, your personality. For me, I like a combination of Adam Grimes, Linda Rashke, Al Brooks, but yeah, that's just what I look for. Like looking at really key levels, looking at what happens around the close of a candle. Next slide. So I'm gonna go over some setups really quickly in this presentation. I don't want this presentation to be too long. I'm gonna make another presentation down the road where I do focus more on my setups, because I need to be more specific in what I take. Sorry about that. My chief problem is I was trying to do too much. I wasn't being selective. So really just focusing on what works. Gap and goes, or gap closes. Gap and goes to the upside if it's coming out of consolidation. It can be like a bottling up, especially if it opens above the previous day's range after a consolidation period. It can really fly up. But if it's already gone up a bit, and say we're approaching resistance and it's gapped up, that might be a much better time to go for a gap close play. So and then pullbacks. Well, I'm getting a little ahead of myself here. I want to cover this slide first, but so like I said, mainly derived from Adam Grimes. I've had a personal contact with him, and he's been a huge influence on me. I should point out that a lot of these ideas I got from him, so they're nothing new, right? A lot of these have been around even before Adam, and I'll just put the disclaimer: anything that you like about this or that's helpful, it wasn't me. But yeah, I'm sorry. The setups need to be simple and easy to follow. All right, we can't overcomplicate trading. Trading is so hard. So we have to have them simple and easy to follow. you have to make quick decisions trading, right? So you need to be they need to be quickly identifiable and quickly dismissible. We should pass on most trading opportunities. Um, what? How can I look at a chart really quick and gain as much information as possible? I want to look at the hourly. What's it doing? Is it consolidating or is it expanding? I want to look where it is in relation to the Keltner channel, which shows me how close it is to the mean or in a mean reversion. Look at the volatility on the 5 minute. Is the ATR on the S&P above 5 points? Is it above 6 points? Is it above 7? Is it too high that I shouldn't be trading because we're having craziness? Or is it high enough that it's making clean moves and all the market participants are on one side? I generally, you have to process and go through all of these questions really fast. So having a set of questions that you can ask yourself to remain objective is critical. And you have to say, if I don't see one of my setups, I'm not going to trade. I'm going to walk away. I can walk away till the end of the hourly bar. I think the best opportunities lie in the first 2 hours. After the first 3 hours, if you haven't taken a trade, for me, I'm going to just focus on walking away. I mean, we're busy. Part of the reason we're traders is to have financial freedom and freedom of time. I think being able to go wherever you want, whenever you want, use your time, that is the ultimate form of freedom. And that is why my main purpose for trading is to be financially free, and control my destiny in this way. Being able to travel is great, but and I want to, and be a good provider and all that stuff. It's all really, I have a pretty wholesome purpose, I feel like. It's not like I'm not a flashy guy. I don't want to. I'm getting way off topic of this presentation, so I'm gonna bring it back in. The three setups I'm gonna look for are just breakouts from consolidation, a coil or a bottle up. I'm a pullback. So like when it contracts before it expands. So simple pullback, just down. A complex pullback. ABCD, which is a complex pullback, a nested cup or a nested flag. So it makes a move, it pauses, and doesn't move very much, and then before the next big move up. So, and thinking about where the bulls and the bears stops are, right? Like if we're in a volatile market and it makes a huge move one way, a lot of stops are going to be triggered. People are going to look to close out positions. So expect like a pullback, maybe it could be 1 hour pullback, an hour, 15 minutes. Just really pay attention to the close of the 15-minute bars. You don't want to pay too much attention, but paying attention, because you want to focus on wicks, what the candles are doing, just the general character. And if I'm all over the place with this presentation, it's because I am. A lot of this is kind of thinking out loud, and I'm making this presentation for me, right? Like I want to kind of engage with people and talk about what I'm going through as a trader, and I want to have a record of it because I want to document my whole journey, right? Like I've been trading 6.5 years and really seriously trading the markets, just the S&P and the NASDAQ for 2 1/3 years. Since it's May 1st now, I've been trading just the S&P and the NASDAQ since January 3rd, 2022. So I've been at it a long time. Not where I want to be yet, but I feel I've learned a lot, and now it's just all down to my chief problem of trying to do too much. Like I need a higher win rate. I want to be the type of trader that doesn't have a volatile P&L. Like I want to go for base hits, 2R, 3R base hits. Risking 5 points, 6 points, 7 points, 8 points on the S&P. Or risking 25, 30, 35 points in the NASDAQ and going for those base hits, right? Like 0.2 to 0.25% is what I want to risk of the indice, or less. Not too close and tight that it doesn't smothers it, but again, I'm getting off topic here. I hope this information is helpful, and if you're sticking with me, I really appreciate it. So I'm gonna go next slide. How do I follow my setups? I've touched on this already, but wicks. We really want to focus on the wicks. It shows where price is being rejected from or consolidating to. We want to avoid ranges because ranges are random. They spike, and say you're short, it'll spike up and stop you out, and you'll get screwed out of the position. And I also noticed sometimes they'll spike a direction and overreact, and that can actually start a trend in the other way. But focusing on the wicks is really helpful. I have that image there, the bottom image on the right. It shows how, you have that hammer and you have the hanging man, and they both look the same, but depending on the context, it can, of what's going on around it or before it, it can be bullish or bearish. It's the same candle, but depending on what's the context is, the market character, that determines what you do. Same with the inverted hammer and the shooting star, right? Like shooting star is bearish, but inverted hammer, that can be bullish if it's in a downtrend. I'm going to go back to the slide, actually. I want to focus on one more thing. So the reversals, we only want to take those. And again, I'm going to have a much longer presentation eventually on my setups. But the antes, we only want to take the reversal plays, after a break in market structure, after it stops setting higher highs and higher lows. Once it starts to really slow down, that's when we want to go for an ante. You have to remain objective. You cannot guess. Your biggest rule, the biggest no-go is you cannot try and guess the top or bottom of the market, and you cannot guess the top or bottom of the market, and you cannot fight a trend. So going for reversals is scary and risky, and generally you just have to be very careful about when you go for them. It's much better to join with the trend. The Trend is Your Friend by Jesse Livermore is one of the best trading quotes of all time from one of the most famous and best traders. So I'm going to go back to the next slide. Focus on the close of the key candles in the morning, the wicks, the general character. Just asking yourself, what's it doing? Where is it in relation to the moving average? Looking at multiple time frames and saying, okay, 4 hour looks bullish, 1 hour looks bullish, 5 minute looks bearish. Maybe that means that the 5 minute is offering you an opportunity to get long. Maybe it's a pullback on the 5 minute, and since hourly is bullish and the higher time frames are more important than the lower time frames, if a lower time frame is contradicting, and you're biased towards the direction of the 1 hour, take that trade. In other cases, it may not be. The 5 minute may be showing you that the trend is over. You just have to be really objective, and it's really hard in the moment when you're biased, but that's why you just need to pass on most trades. And yeah, so next slide I just made for doing some doodles. So general pullback, this is what we want to just get in on, these points here, consolidation points. It'll rarely ever look that clean, but say something like this happens and it starts to go lower, this is an ante right here. All right, so we want to wait till it starts going down again, really down, because maybe it starts going up and then it comes down, and then it starts going up, and then it starts going down, and then it goes up again, right? Like this right here, that would be a bear trap. It'd be tricking you to go down when it's really going up, right? So you really want to wait for, you know, a more concrete move that's slowing down, right? Like maybe a couple tops, maybe, you know, if it's making measured moves, and then like the legs start slowing down. Like this would be a good time to get short, I guess, because it's not like here is aggressively getting bought up. Here it's making lower highs, uh, it's not making lower highs, but the highs aren't as powerful, um, especially if it breaks below this and then comes back up here. Like this is the best time to get short. So exit out all of that. And then, of course, opening range breakouts. Say it's consolidating for a while, and then like this is, you know, Monday here, Tuesday here, and then Wednesday opens up here. This is a great time to get long, like once it starts turning. But let's say it's already happened, the break has already happened, and it opens up here. All right, so Monday, Tuesday, Wednesday, say it opens up here. This is a good time to get short because it's already moved, and the opening range breakouts work best after some. The opening range breakouts work best coming out of consolidation, and the gap closes work better after, you know, it's in some resistance. So recap, my final words. I do want these presentations to be more structured, but the reason I really just want to create content, and because when I create content, I learn. I'm building something and putting it out there. So it may not be the best, and maybe I should have started with this message, but it helps me be honest and keep learning if I commit to keep making videos. And I have a couple more presentation ideas. I'm going to try, I guess, and keep them shorter. Clearly, I'm all over the place. You know, an experienced trader is going to watch this and say he just needs to refine his setups more because he doesn't have a clearly defined edge. I'm self-aware of that. Self-aware that the ego will screw me because it just wants stimulation and wants big wins, and by not having defined setups, it'll hurt me. So I'm really trying to be more clear. I'm going to say last words. I'm going to type here. I'll say key learning. It's not even a learning. Key point. Be selective. Focus on specific criteria. Skip on most opportunities. Have objective things you can look at. Make another slide. Recap two. Be selective. Focus on specific criteria. Let me delete this actually. Key points. Be selective. Focus on specific criteria. Skip on most opportunities. Have objective things you look at. Tim Ferriss says that what stands between you and getting what you want are a set of good questions. So what questions can we ask ourselves to be more selective? What does 1 hour say? What's happened on daily? Expansion or contraction cycle, which is basically just drift and mean reversion, or trend and mean reversion, whatever you want to call it. How can I have the trend on my side? Am I considering alternative hypotheses? Can I trust myself? Because our brain lies to us. Apophenia. So I think this is where I'll leave it, guys. This presentation has been going on 25 minutes, so it's a very long presentation. But please comment your questions. Hit me up in the comment section. I will love to engage with people, and I could even make a video of answering questions. I mean, I really doing this. They say you're supposed to have someone. When you're trying to get better at something, you want to have someone you can teach, someone at your level that you can be accountable to and discuss with, and then someone better than you. And by making these videos, I'm interacting with people at all three levels. People who are way better than me, people that are professional traders, people, maybe some of them are at my level and going through similar things, and maybe you're new to trading. And one thing I can say is, I do have good resources, because there's so much BS, there's so much information out there. There's too much. You don't know what's right and wrong. And if I would have had someone at the start to just say, hey, focus on this, and this, listen to Adam Grimes, read the Market Wizards books, make some connections in Discord communities, like this type of thing, like focus on Al Brooks or Linda Rashke, whatever. Like, if I could have had someone to tell me this, it would have taken years off my journey, or months, and lots of money, mainly, is the main thing. I wish I knew how to back test well earlier. I mean, now I just go into the simulator and I just trade and get reps in, because there's no substitute for screen time. And I think even screen time with money on the line is there's no substitute for that. I mean, you have to be good in the demo account and the replay account before you can go live. Most people won't do that. Most people will just go in with money, like me, which is dumb, because you're guaranteed to lose it. You might have some success, but you're guaranteed to lose it. But yeah, what I'm trying to say is, hit me up in the comments. Maybe we can connect on Discord. And good luck to everybody with their trading. Trading is so hard, but I think it can be really rewarding. So I appreciate it. Thank you for watching.